Hi everyone. That's great. So you have been waiting for one of the greatest panel of this this conference. So we are going to be talking about Bitcoin and capital markets, and I have some very interesting panelists for this session. So Andrea Cosentino, let's give him applause. Come on. Then we have got the president of Tobam, that has been one of the biggest investors in digital assets and Bitcoin treasury companies. He's coming from France, so he's going to arrive just in a few minutes. So next one is going to be Alex, that is joining us from Norton Rose. And Roy Calsi, CEO of Falcon Edge. Great. Now, so obviously the topic is Bitcoin capital markets, Bitcoin treasury companies. That's been one of the most exciting things happening this year, following obviously strategy massive success in the US. Yves, great to have you here. So joining directly from Paris.
Oh, there you go. Hi, how are you? I think
Great.
so your seat right now. Now you should go there and get mic'd.
So what I wanted to do, maybe just give our panelists the opportunity to quickly introduce themselves. So Roy, do start because you have got something very interesting to say with your upcoming IPO.
Sure. Hi, everybody. So I'm the CEO of Falcon Edge. We are a hedge fund advisory, non-regulated business with a Bitcoin treasury policy. We spun off from our affiliate parent company, Falcon Investment Management, which is an 11-year-old hedge fund, full-scope FCA-regulated umbrella business, which has over $1 billion of assets under the umbrella, of which half are in crypto. So the plan is we're listing on November the 5th, and all the proceeds, ex-costs, will go into buying Bitcoin, and from there on, we have some very interesting mechanisms to grow our Bitcoin balance sheet, which I'll go into in detail later.
Alex?
Yeah, hi everyone. I'm Alex. I'm a lawyer, a corporate lawyer at Norton Rose Fulbright in London. I'm part of our capital markets and listed company practices, and also part of our global fintech practice, where we advise many digital asset firms, both private and public, on M&A and transactional activities, IPOs, listings, and also the full sort of range of regulatory obligations.
Andrea Cosentino here, founder and CEO of Impact Foundry, a group of companies that consists of a venture studio, 512 Ventures, cognitive strategy, looking after strategic consultancy, and Cognitive Academy, focusing on education. We've been working in the Web3 space since 2015, 14, I would say, under a previous name, another venture studio that exited in 2020. Currently, we run one of the largest Web3 communities in partnership with Barclays here in London, in Eagle Labs. Other than that, of course, we've just revamped our venture studio specifically, and we look after decentralization and regeneration around this topic, as well as anything else really in Web3, in the Web3 space. We operate in the UK, in Europe, and in the Middle East. We have 2 offices in the GCCs.
I'm Yves Chauvetti. I'm the founder of Tobam. Tobam is an asset management company based in Paris, New York, and Dublin. We began looking at Bitcoin in 2013. In 2017, we launched what is recognized as the first open-ended fund invested in Bitcoin in the world. In 2018, we stopped everything but Bitcoin, so we stopped the other crypto activities. And we started invested in MicroStrategy in 2020. And in 2023, we built a fund dedicated to that. And today we run 3 different funds on Bitcoin treasury companies.
Great. So I just want to kick off with like a very, I think it's a very interesting question because obviously we got the hype of many Bitcoin treasury companies in the past few months. Some they perform amazingly well, like the Smart Web company. And now obviously there are many other companies that are coming to market. And one of the questions that many people ask themselves is like, how this strategy is going to be sustainable, how you can create value for shareholder and for many investors, especially retail investors, institutional investors, they are buying digital assets or Bitcoin treasury companies. How do you do that? And that's where I really would like Roy to explain, their proposition, how they are going to make money, and what do you think about sustainability for Bitcoin treasury?
So, obviously, in the last people that have been following the treasury companies, the last 3 months have been quite painful. They've seen their share prices fall close to 90% because I think in April, May, June, the MNAVs expanded to 20, 30, 40 times their NAV, i.e. the Bitcoin held on their balance sheet plus total enterprise value of the company. That was never going to be sustainable. It was the excitement of one, Bitcoin making all-time highs, but two, the influx of new treasury companies and new jurisdictions other than Strategy in the US, who've been doing it for 4.5 years. So that bubble's kind of burst, and now a lot of them are trading at or below their NAV, so negative MNAV. Whilst I think that's completely the wrong level because treasury companies do offer you, as an investor, a means to Bitcoin exposure, but via the capital market so they can grow their balance sheet, which just a normal investor cannot. That's via equity raises, debt, convertibles. But this is where I think you've seen it in cycles over the years, booms and busts with .coms, ICOs, the miners, AI companies, and the same thing's happening now. I think there will be winners and losers in this sector, and the winners will tend to be the ones that can offer something else to shareholders. You can't just use the shareholders as your yield via ATMs and book builds. You have to offer something else. And that's, we would say, as well as a core operating business that can be self-sustainable, which we have, the other part is actually using your balance sheet to generate a yield on your Bitcoin. Why is this important? Okay, right now it's very hard for these companies to raise capital, as we've seen in the last 2 months, because, as I said, their MNAVs are trading close to 1, so it's not accretive to shareholders to raise capital via ATMs. So they're kind of stuck in a way. And the only way to really do that is to be able to have other means to raise capital. So for us, the way we look at it is taking debt on the balance sheet, but as long as you can service that debt. So how do you service that debt? You have to get a yield on your Bitcoin. And the larger your Bitcoin balance sheet is, the more substantial that becomes. So we're very comfortable with our background that we can get a double-digit yield on our balance sheet, which will be able to service the debt that we can take and have a compounding yield to buy more Bitcoin. And I think that's where companies need to start deviating from, let's say, the Michael Saylor flywheel, which was great when you're first mover, but now it's become a more saturated market. There have to be new means to actually, I guess it's Treasury 2.0, I like to call it.
Yves, what do you think about this?
I think I disagree. There are two ways to look at it. First one is historical. In my mind, the first asset treasury company was launched in London in 1694. At that time, a group of businessmen met in London and they decided to create a company which goal would be to raise capital in order to buy gold. And they called the company the Bank of England. The same happened in 1800 when Napoleon in France organized a meeting amongst the 100 wealthiest families in France. And he told them, you need to do like the English. You need to create a company that is going to raise capital in order to buy gold. And you're going to call this company the Banque de France. And those two companies became the most prosperous companies in the world until they were nationalized in 1945 and 1946. The economy is a system of trusts. You only exchange trust in the economy. When you are an employee or an employer, when you are a seller or a buyer, you exchange trust. it can be proven that in a system of trust, in order for the trust system to work efficiently, you need to have what is called an unquestionable asset. And for centuries, the unquestionable asset was gold. There's one problem with gold, at least one problem. Gold is difficult to audit. You cannot audit gold. The only way to audit it properly is to melt it. Then the next cornerstone of trust was the dollar. But a growing number of people believe that it is in the objective interest of the United States to devaluate the dollar. And this is not compatible with the status of cornerstone of trust. So I think we can almost now consider that the cornerstone of trust place is vacant. And there is a small orange candidate raising his hands and saying, I'm ready. What is very fascinating with the central bank proper job, not this kind of things we are talking about today, but the Banque de France and the Bank of England of before, it is that on their asset side, they need to do a boring job, in my mind. The adding value job is done on the liability side. And it's precisely what Michael Saylor is doing. He's inventive, but on the liability side, not on the asset side. We have published an article that deciphers the performance of MicroStrategy into three terms. And we have proven mathematically that you can write properly, not statistically, but mathematically, the performance of MicroStrategy as a sum of three terms. The Bitcoin yield, some kind of a growing beta to Bitcoin, a convex beta to Bitcoin. And the third term is a variation of the MNAV. And the FNAM is here only as a crystallization of the expectations of the agents for a future Bitcoin yield and for a future appreciation of Bitcoin. And what has happened in my mind in the markets in July and August and September, it is really an incredible disappointment on those expectations, mostly on the appreciation of Bitcoin. Everybody bought those companies having in mind 2024 and the craziest expectation of appreciation of Bitcoin. Unfortunately, this has disappointed. Then you had a few sellers, and unfortunately, those companies being not liquid, those stocks being not liquid. In the same way that when they were bought, the MNAV became crazy high, today they are crazy low.
Yeah.
There is no way you can justify an MNAV at 1. An MNAV cannot, in a sustainable fashion, go under 1, and therefore the MNAV should be higher than 1. This is my long...
that I do agree with. Yeah, I completely agree with that.
Okay.
My point was you can't just have, for us, we'll be having similar structures to what the companies are doing with equity dilution in terms of ATMs, book builds, private placements, but there has to be a balance, and that's the difference I'm saying. And that's why probably the MNAVs have been hit harder than they should be. There's just been a bit too much dilution for the companies to sustain.
Andrea, what do you think about Bitcoin yield?
Oh, I love it. I'm very, thanks, that's a good question. I actually love it. I think, to build on top of what the gentleman said, clearly currently there is quite a few people, companies, whatever it is, they have a concentration of assets, right? And as much as we love price appreciation, that is not going to go forever. And then at some point, as a limited resource out there in the market, there will be a question where, well, what do we do with it, right? We can't eat it. We can't really, do jewels with it, contrary to gold. So what are we going to do with it? And probably that's really the answer. That the more I talk to people, yesterday I was Zebu Live, another event focused on blockchain. And everyone is really talking about Bitcoin yield more and more and more. And that's great, because the question is, how do we get these Bitcoins that we hold now to actually generate something more, right? And truth is, there is a lot of demand out there, especially from players like miners, for example. They hold these assets quite a lot. Custodians, they hold these assets quite a lot. And it's just basically there. And all you're doing is waiting, like the meme, that touches is like, hey, do something. And then we want it to do something, and the way to do something is to then put it to deployment. So we do see a lot of companies now that are getting into the space, or some companies that exist in the space already. They're getting into creating products that can actually build a way to deploy and return yield to the customers and the clients that have Bitcoin in their portfolio. And this is definitely going to grow more and more and more, because again, there is a need to do this. With that, it comes also a lot of flexibility. If you think about treasuries and if you think about investors in general, Bitcoin brings, first of all, jurisdictional freedom, which means you actually are in the web, so you don't really have constraints from you do have constraints from a regulatory perspective somewhere, but if you really want to. But also a faster way of settling, fragmented access to investment as well. So technically, it is a great opportunity, and that's why I think is the next wave that we will see. And I can tell you, I can't do names, but as I mentioned, we do have a consulting arm. Our consulting arm right now is working with 2 or 3 players, I would say. One for sure is a Bitcoin layer 2 solution. Another one is an institutional player that most people in the audience know. We've been working with them for quite a few years. In both cases, one is institutional, one is more of a DeFi player. They're both building a sort of vault or something similar to what my colleague is building right now to bring this to market. And there is an extreme need for that, and we will see more and more coming up.
Alex, so Andrea mentioned about regulation and some of the bottleneck that maybe investors need to go through, and maybe many of you knows already, and also I think companies as well. When they come to market, they've got a few hoops they need to go through to get the company listed. It would be interesting if you can share maybe some insight from your perspective working in this space, and also with the recent approval of the ETN here in the UK, how that is impacting the broader investor landscape, and what companies, institutions, investors can actually do to get exposure to Bitcoin in different ways and forms.
I think as a starting point, I think if you look at the UK versus the US, it's clearly slightly behind in terms of maturity in this space. But that said, there are successful examples of companies on the UK markets. I think if you look at the rules, there's nothing in particular stopping Bitcoin treasury activities from flourishing here. There's a number of things that companies need to be mindful of. In terms of sort of requirements, particularly around the FCA is very focused on systems and controls, ability to monitor your financial position, due diligence on counterparties, so custodians and so on, risk management. And there is a market abuse framework kind of on its way in the sort of nearish future. But I think, from an FCA and kind of market perspective, there's nothing stopping this happening within, those parameters. And, it's a case of sort of watch this space and see where it develops. As I say, it is, slightly behind other markets, but I don't see any reason why it couldn't flourish in the nearish term. But I think from the perspective of investors, that's a slightly different question. I'm talking about sort of the regulations that apply to the companies themselves, but I'd be interested in, I don't know, Roy's and others' views on investors. I mean, clearly that's more about does the strategy work? What's the overall exposure? What's the sort of game plan? It's a slightly different question.
Yeah, I mean, from the investors we've spoken to over the last month, they've brought up the especially from the UK side. Actually, we can invest in ETNs. That gives us the Bitcoin exposure, but there are flaws with that, and I'm sure Yves will agree on this. They can't. The beauty about a treasury company is growing your Bitcoin yield versus Bitcoin share. So the Bitcoin you hold on your balance sheet, and again, that's being able to access capital markets, which over time, you're effectively getting free Bitcoin by buying the treasury company. So for us, that's something that you don't get just by holding the ETN or just buying Bitcoin outright. And that's where it's quite important on the treasury side and where there's so much added value, which is why they should be trading significantly higher above their NAVs.
Yves, do you want to maybe say, from your perspective as an investor in the space, why Bitcoin treasury companies, why you wanted to kind of focus on that sector, and also looking forward, we mentioned about strategy, what it's doing. I mean, what excites you about this space?
What excites me, so in fact we are driven by two parameters. A Bitcoin treasury company is in fact, at this stage at least, driven by two parameters, the performance of Bitcoin and the MNAV, to make it short. 2025, I've been investing in Bitcoin since 2013.
Wow.
I believe the best year, the most promising year ever that we had was 2025. And I would say that to summarize all the beautiful oracles that we have on Bitcoin, I would say, I would give you one figure, 60%. 60% is the performance of gold in 2025. Nothing can be more promising for Bitcoin than an appreciation of 60% on the price of gold. Because, gold is exactly the same thing as Bitcoin in less effective. So it's exactly the same thing, but it's less effective. So everything that happened to gold usually happens to Bitcoin a few months later. In the past, it has been the case. So 2025 was the most promising year you could have on the first parameter. On the second parameter, the MNAV, I think that 2025 has proven exactly how it works. How appreciation of MNAV goes incredibly quickly when you have momentum on expectations. MNAV was 23 times the NAV. The MNAV of Metaplanet at a certain moment in the first half of this year was 23. It's huge. It's probably not justifiable. It's probably too high. Then, as soon as the expectations on the Bitcoin price and on the Bitcoin yield went down, we went to a MNAV which was lower than 1, which also is extremely difficult to justify. So it went too high and it went too low. So today we have the perfect circumstance. We have tailwinds on all of the drivers of Bitcoin, and we have an MNAV which has never been as low as it is today. And what drove the MNAV? What is it that drives everything today in capital markets? Capital markets are completely barbell, organized in a barbell fashion. You have a huge part which is completely passive, which have somebody which is passive is somebody that has resigned his role in terms of price discovery. The role of active management is to do price discovery. If you're passive, you have resigned your role. And those who do the price discovery, those who drive the price, if I want to make it short, I would call them hedge funds. Yeah. So they jump from one opportunity to the other and they drive the prices. So probably they played a role in the gold bull run. And probably they played the role in the MNAV meltdown. Why? Because 2025 was the worst year ever for shorts. So they needed to make up for that. And that at the end, if you short and you short, you are going to drive the price down, which is what happened. And in the case of Bitcoin treasury companies, it was relatively easy because of the lack of liquidity. Today, as soon as, let's be crazy, let's imagine that one hedge fund one day realizes a crazy low MNAV, they are going to buy it. And the same way that you should drive the price down, they can drive the price up. So on my side, I'm absolutely convinced that we haven't seen yet in the past the ATM, the all-time high, the ATH, sorry. The ATH of the MNAV. So the MNAV will come back for sure as soon. A Bitcoin treasury company is like a surf. It's a surfing board. You need a wave. If you don't have the wave, surfing is quite boring. So as soon as we'll have the wave, it's probably one of the best tool you can imagine to surf a wave. But without a wave, it doesn't make sense. So it's boring from time to time. It's even frightening.
Yeah.
But if you look at the fundamentals, I think those companies, they own definitely one of the most liquid assets in the world, and probably one of the most promising assets of the world. So not to buy them at an MNAV of 1, or shorting them at an MNAV of 1, is quite...
I think you got a very interesting point that also Saylor said at the conference I was in Orlando in May. Volatility is vitality, right? And there is no most exciting space really in capital market. They're actually investing in this sector. It obviously all come down to the teams and to execution. Now, I just want to touch about the liquidity side, because I'm quite interested to kind of explore and also see the perspective of the EU as well. So we have a market in the UK, a retail market that is active, but obviously, the US is kind of like really strong, where, your investors taking more risk and putting more money, and there is just more capital going about. So Alex, I want to kind of like pick your brain and then see how do you see this market and, the liquidity around the US compared to the UK, compared to Europe, which is actually what is driving, really the network effect of those Bitcoin treasury companies.
Yeah, in terms of liquidity, I mean, as you say, the US is clearly the deepest market in the world. Beyond that, London is somewhere ahead of other European venues, I would say. And also within London, there's a number of segments these companies can list on. So traditionally, Aquis, which is an arm of the LSE, has been very welcoming and receptive of digital assets companies. AIM, perhaps less so, but many, and some of those companies that started on Aquis are now stepping up to the main list. And once you get onto the main market, you become eligible for FTSE indexation, which means a lot of funds have to look at you, and passive funds will track you. So that opens up a whole new world in terms of liquidity. So again, I would say it's very promising here, and as investors become more comfortable with it culturally, as perhaps the regulatory framework is fully formed, I think, which also gets market participants comfortable to invest too. That will all sort of fall into place together, I would say.
Okay, so really positive for the UK. Andrea, share from your perspective. You're working with many angel investors. They were very excited in the past few years about DeFi, NFTs, but really the game has been Bitcoin, right, this year, which has proven to be the most valuable, solid asset. I mean, it's sound money, it's digital capital, and how your network is thinking about, interacting with capital markets here in the UK.
Yeah. Well, I mean, if you look at the angel investors, it's a different kind of perspective to asset investors, right? Yeah. If we look at the angel investors, there was a massive wave, of course, especially just towards the end of COVID and prior the crypto winter. A lot of money flowed into Web3 to then be extremely disappointed, which is why we saw not only the scandals, but a lot of companies completely defaulted and never got their money back. I think now is in a stage where there is a lot of maturity from the investor in terms of understanding what is a scam and what is not. Is actually much more clear, but also the average angel investor is much more skeptical about what a good project could be and what the utility really is of the project, because that's really the question every single time is, what is this project going to bring as a utility? What is different? What is the USP, right? There is plenty of projects out there, especially at stage 0/1. So I think, it's more of kind of a type where there is experienced Web3 investors that keep investing in Web3. And I'm making it about Web3 first. And then there is not many newbies that get into the space because a lot of people got hurt in the past. I don't want to get hurt again. which makes it complicated if you're running now a venture studio into decentralization and regeneration, right? But I think there is still a great hope in the mid-long run, because I do believe in DeFi myself a lot. So otherwise, I wouldn't be here today. So that's definitely, there is a thesis and then a kind of again, a long-term vision. If you look at it from a more asset investor's perspective, what I've seen, especially in Europe, because again, I was having this conversation yesterday. I'm glad you mentioned, of course, the regulatory piece. But it's funny, the UK started literally one step ahead about like 7-8 years ago, probably something more. And then at some point, they decided to completely shut everything down. And now they're like 10 steps behind. Someone yesterday I was talking to compared UK to the US, saying that the US now has the first mover's advantage and the UK is second. I completely disagree with that. I think we are already like on fourth place probably, because this person hasn't had a conversation with the Barra in Dubai in UAE, which is actually 2 steps ahead already. And in the next few months, they're gonna release quite a few regulatory updates. They're gonna let a lot of crypto stuff happening, and so attracting more investors and more assets. If you look at the ETF instead, that has been the real gateway of the last 2 years. With my great surprise, one of the projects we've done with a major ETF provider, which again, most of you might know, was to help them expanding into Southern Europe, so including Switzerland, Italy, Spain, Portugal, and a little bit of France. And to my great surprise, the demand was astonishing great. Like, there is actually a very good understanding from the average investor, which is probably not a digital native, of the asset, of the potential, but then it goes back to, they're not really investing in the underlying assets itself, they're going back to the institutional product. So what I've seen so far is that there is a lot of demand for ETFs, or the asset itself, nothing in the middle really.
All right. That's quite interesting. Yves, what do you think about, I mean, Andrea mentioned about DeFi, and I want to kind of like get to the point about, you know, for example, custody of Bitcoin, kind of the element of integrity that goes around how you manage this Bitcoin treasury strategy, because there is a playbook, and the playbook is not just, okay, I'm going to buy Bitcoin and, you know, hold it in my wallet. I mean, digital asset or Bitcoin treasury company, they have a playbook they need to follow. And from my side, I really think the integrity is really important. So, yeah, going back to the question is, how do you think about, you know, all the context around deploying a Bitcoin treasury strategy as an investor? What makes you feeling, right, that's, I'm okay actually with this investment, I feel safe, those are the right party they're working with. And especially when it goes to DeFi on Bitcoin, just share your thoughts, because I think might be important for some people, they are looking into that.
I think it's important to remember that everything started something like 8 months ago only. Yeah? So MicroStrategy was accumulating Bitcoin, but they were quite passive on the liability side. They really started, everything started with the ETF in a way.
Yeah.
When the ETF was launched in the US, as usual, Michael Saylor had to invent something new. And this is one, and he prepared for that, of course, and this is when he came up with his model. If you look at the vocabulary we're using, the vocabulary is improving. The playbook was not completely written 18 months ago, and I believe it's not written today. So I told you, for instance, that the asset side is boring, must be boring in my mind, because it is the unquestionable asset. When you have a banknote, a convertible of Michael Saylor is some kind of a banknote. You don't want to question the assets.
Yeah.
Okay? But on the asset side, you have multiple categories of Bitcoins. You have Bitcoins that really are owned by the company, and you have Bitcoins that are here, but there are some liability on the other side of the Bitcoin. You have orange Bitcoin and you have gray Bitcoins in a way.
Gray Bitcoin.
Okay? I think all of this sophistication is going to improve, and so we have written this article I told you about that we published in March, We have today written 2 other articles that we, for the time being, we refrain from publishing. But I think the science of understanding all of that, the vocabulary, is going to improve. I'm not sure as of today that DeFi is the most important, challenge. I believe the challenge is really, I would say it's reach.
Yeah.
Yeah? The idea is, what Michael Saylor has done in the US is incredible. He has captured the market of convertible bonds. Can you imagine that? A company that was like a joke 4 years ago is now, I think, 41%, if I remember well, of the volume of convertible in the US last year was MicroStrategy. And today he's resurrecting a new market, the perpetuals. And perpetual is the ideal media of trust. If you are some kind of a treasury company, but with the real meaning of treasury, what we want to issue is perpetuals. It's so all of that, it's true theoretically. Then it's true from a implementation point of view in the US since last year, but it has not yet reached all of the investors, all of the users. People are still, can you believe it, storing value in things like dollar, euro, or yen. It doesn't make any sense. But they are still storing value here. They are buying worse. I was in Abu Dhabi 6 months ago, and I was explaining all of that to investment committee of one of the largest sovereign wealth funds in the world. And my last slide was a slide representing an oil well. And I told them, let's be crazy and very imaginative. Let's imagine that one day you discover oil in Abu Dhabi. Let's be completely crazy. And then I told them, I don't know whether you read newspapers, but if you read newspapers, you probably know that oil is something that is rare and useful. Would you exchange something that is rare and useful against something that somebody else can print infinitely without any costs? Now there is something worse. You could sell oil and buy T-bonds. And if you think about what is a T-bond, what is it that you get when you get the T-bonds? You get a promise from somebody that is telling you 10 years from now, I'm going to print more money. This is what the promise you get. So all of that doesn't make sense, in fact. But people are unconsciously, they are aware of that. But as soon as they will be consciously aware of that, plenty of things are going to change, I guess.
Yeah, it's very interesting. You keep your money in the bank account, you get, 400 basis points in the UK. I think it's even negative in Switzerland. It's 50 basis points in Japan.
In terms of value, it's negative.
Exactly.
Huh?
It's
in
just
terms
crazy.
of rates, you get positive rates, but you're losing value every single day.
Exactly. Roy, please comment on that. And also, I just want you to add, because Yves mentioned about, the preferred shares, the strategies issuing, and this new digital credit. Is that something that companies in the UK can do? How you can get to the strategy kind of a stage?
You can do that. I think to get to strategy stage, to do the preferreds, you have to have a critical mass, and that's a certain amount of Bitcoin on your balance sheet. And I don't think there are any companies, certainly in the UK, not even SmarterWeb at the moment, that are there yet. And I think they've acknowledged that themselves. But they can definitely get there, absolutely. And to add to that, I think the treasury companies in the next few years will be seen as the banks of the future, because they're going to be holding the best asset you can hold, which is Bitcoin. And the best asset you can hold is Bitcoin, and they'll be having the most of it, and they'll be holding it. And the other thing people haven't quite understood, there's 21 million Bitcoin, of which 95% has been mined, and you're probably not going to ever mine the full remainder of it. Treasury companies already own, Strategy is a large part of that, but they already own over 1.1 million of the possible Bitcoin to even own. And it's only the beginning, it's only just got started. So there will be a supply shock And so many people just haven't understood how early we are on this. And I think that's where the growth is it's only beginning, and it's going to be exponential. So, and the more treasury companies there are, and treasury companies don't sell their Bitcoin. I mean, they shouldn't, or they won't really be a treasury company. It sits on the balance sheet and it grows as Bitcoin grows.
Any other final thoughts that you want to share? We have got 3 minutes, otherwise we can maybe take a question from the audience. Do you have any question that you want to ask anybody? Please.
Can you hear me? There we are. With institutional buying and everything else like that you've mentioned, do you think that the traditional 4-year cycle is still in play, or do you think it's changed?
Go on, Yves.
No, I think it's finished. In my mind, one way to explain the 4-year cycle, first of all, there was the halving. The halving was a very important milestone. Today, it's not significant anymore. The amount, the flow to start ratio is ridiculous. So this has, in my mind, removed one of the very most important reasons for the cycle. The second, in my mind, the second reason for the cycle was that because of the halving, a few months after the halving, there was a bull run. And as soon as you have a bull run, some investors will look for high beta vehicles. And the high beta vehicles of the past were the altcoins. And today you have other vehicles than the altcoins. You can borrow money, you can buy treasury companies. And when you used to buy the altcoin and sell your Bitcoin, you were killing the bull. Now you are feeding the bull. If you buy treasury companies, if you leverage your ETFs, the way you can do already in DeFi, but you are going to be able to do that in banks in the US very soon. You are going to feed the bull. So in my mind, I am very, very much convinced, it's a speculation from me, but I'm very much convinced that the 4 years cycle, we will have something like that, because there are always, expectations, but it's nothing going to be like in the past. I'm very much convinced about that.
It's become so institutionalized now. You're not going to get those drawdowns you saw back in the past when people all could go to zero. Those days are over.
Right.
I think people have recognized this is here to stay, and it's the asset to own.
I go back to the ETF point, which is it created now a sort of flow in the whole experience, right? So it kind of broke
BlackRock,
whatever was the ups and downs that he was describing. It just doesn't happen now because there is the institutional recognition. So that created again a flow that doesn't go down anymore, and then it's gonna just keep going because it's the final validation he needed. So it's just completely changed it now.
Alex?
Nothing to...
I mean, regulation has been something that now is becoming more positive towards Bitcoin and other assets. So I don't think we have the bottleneck anymore, but if you want to add anything.
No, I think, Roy made the point. Bitcoin treasury companies, will exist to hold. I think, having said that, they'll need to differentiate their strategies from other treasury companies. So how that's managed in terms of yields and selling in future will be very, very interesting. And indeed, from a regulatory standpoint, they'll need to be careful not to stray into areas sort of unintentionally where the rules end up biting them. But that kind of all remains to be seen.
Okay, well, I think we ran out of time. Thank you so much for my panelists, and thank you all of you for being here.